Kitco Mining's special coverage of the Rural Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.
What did we learn from the Rural Symposium in Boca Raton, Florida? Let's ask the host and the man himself, the man who needs no introduction. Welcome to Kitco Mining with me, Paul Harris, at the Rural Symposium, Boca Raton. Rick Rule, welcome to Kitco.
Paul, thank you so much, first of all, for your coming to the conference. Thank you, too, to Kitco for being an executive sponsor of the conference. Without people like you and without organizations like Kitco, there wouldn't be a conference.
Well, that's very kind of you. Thank you. You've had, it's difficult to know where to start. You've had so many very good, high quality, high profile speakers on your program here, in addition to the issuers. Let me start off with the Mining Legends panel. You had Robert Friedland, Robert Quartermain, Sean Rusin, Sean Parry as well, Craig Parry. What did you learn? You make a big fact that despite your sort of 40 odd years in the sector, you're still learning.
Well, I think it's important, first of all, for the attendees and the people who will be attending next year, that they understand that most of the wealth that's generated in mining or any other activity is generated by a very few people. And what we want to highlight with the Living Legends panel are sort of profiles of serially successful people. If you think about the fact that there are maybe 4,500 economic minds in the world and 250,000 earth scientists, it teaches you that most people don't get a mind, but some people get multiple minds. What did we learn from them? Most investors' time preference is a quarter. People have trauma holding stock over a long weekend. Robert Friedland says, from conception to production, it takes 30 years to make a mine. If your orientation is 3 months, you are never going to win in the mining stock market. It takes persistence and tenacity too. Every gentleman who was on that panel has delivered a 10-bagger to me in my own personal portfolio. Every one of those guys has given me a stock that's gone up tenfold or more. And in every single occasion, Paul, every single company, that stock at some point in time during the time I've owned it has fallen by half. So you have to have enough courage in your conviction. You have to understand the company well enough that if it falls in price from $2 to $1, rather than selling out in panic, you buy more in delight. You learn too from those guys that if you're going to take big risks, which you do in exploration, you have to have a big target. Don't look for small mines out of fear that you might be successful and find one. If you're taking big risks, it has to be for big rewards. And finally, we learned that no man and no woman makes a mine. You have to be able to assemble a team. And that team has to be chosen specifically with regards to the task at hand. The successful people in this business are people who surround themselves with other successful people and don't just hire them to fill a role, but rather hire the best people they can. If you are looking for copper gold porphyries or epithermal gold in accreted terrain, 15 million year old rock, hire geologists who are familiar with that rock package, hire geologists who are familiar with that terrain. That's what we learned from those gentlemen.
Okay, thank you. Now, I think, a fun aspect, let's bring a little bit of light entertainment into our conversation. I think you've got a new accolade as the man who almost got a direct answer from Robert Friedland. That must have been quite satisfying.
Robert, were he not so serially successful, I would never tolerate him. He uses a question as a platform for a statement. And he has done that for years. You'll notice that whatever commodity he has found, he finds a way to make the world seem desperately short of. There's all of that. Robert has, while I've known him, been responsible for the discovery of the Fairbanks gold mine, Fort Knox, 10 million ounces. Partially responsible for Gross Rosebel and Oh My, 5 million ounces each. Responsible for Voisey's Bay, the biggest nickel discovery probably in a century. Oyu Tolgoi, the 5th biggest copper mine in the world. Now Kamoa, Kakula, and Platreef. 6 tier 1 ore bodies in one lifetime. If he delivers that much value to my former clients and my current listeners, He can evade my questions all day long. I want to listen to what he has to say, irrespective of whether I asked him the question.
Okay, well, he's certainly a person overflowing in conviction, and as he pointed out, Ivanhoe Mines at an all-time high today, all-time high yesterday, so going very well there. You introduced him as the best presenter ever, and he made a very bullish case for for copper. Sorry. We'll talk about that in a moment. He also called gold a barbaric commodity, I think were his words, and questioned your delegates as, why are you investing in gold when the case for copper is so strong? Obviously, you're very interested in gold as well. Did that cause you to wince a little bit?
No. I mean, being cynical, when Robert discovers a big gold ore body, which he will, he'll be a gold bull again. As Robert so indelicately put it, his job is to stimulate the wallet's hand-to-wallet reflex. He happens to have a copper story right now. You'll notice that he pivoted very neatly to germanium when the headlines said that germanium was something that we needed. I personally am a copper bull, the same way that I am a gold bull. I believe that most investors in the world, most people in the world who are marginally less competent, say, than Robert Friedland, need to own gold. I believe that gold is insurance. I believe it's less than a commodity and more, in fact, wealth itself. Robert is worth several billion dollars. Robert creates wealth. Gold may be less important to him in the same sense that gold is less important to Warren Buffett. If you have the skill set of a Warren Buffett, you probably don't need to hedge your future with gold. I'm not as smart as Robert Friedland. I'm not as smart as Warren Buffett. I need gold. They don't. I'm concerned about me, not them.
Okay. Robert said many things that resonated. He was talking a lot about the energy transition, the need for copper, the very bullish case for copper. And he couched that within the world is starting to realize the need to sort of rotate into real things and away from tech stocks, crypto, and things that perhaps seem less real. What is your view on that?
My view on that is he's partially right. I think that humankind, to use the politically correct term, has underinvested in raw materials for 30 years, for a very long time. I believe there's a wonderful future in technology. But I also believe that we need, as a species, to make up for 3 decades of underinvestment in natural resources. For me personally, the natural resource theme is of more importance than the technology theme, simply because it's easier for me to understand natural resource-based businesses than it is technologies that haven't been invented or technologies that I can't pronounce. So for me personally, the very simplicity of natural resources is an attraction. If you find a commodity that's necessary for the future of humankind, where the price is too low to sustain current production, either the price goes up or that commodity becomes unavailable. To me, in resources, outside of exploration, but in production, you're asking yourself a question where the answer necessarily begins with when. In technology, you're asking yourself a question where the answer begins with if. I prefer when questions to if questions. And so for me, I'm more attracted to natural resources than technology.
Okay, thank you, Rick. Now, in the app for this event, you're asking people about, potentially where to host the event next year. Robert Friedland came out with his own idea and said, why don't you pitch up a big tent in Montana or Arizona next to some of my projects and, have your audience able to see some of his projects. Potentially not a bad idea. What's your thoughts on something like that?
Twice in my life, I've hosted mine tours for investors, and they've been spectacular successes. Logistically, it's a huge challenge. Logistically, I took a bunch of people from Vancouver to an open pit copper mine. That involved a 6-hour bus trip one way, 4 hours at the mine, a 6-hour bus trip back. Everybody said it was the time of their life, and everybody said they'd never do it again. You're 16 hours causing that to occur. The consequence of Robert saying that, not merely to 500 people here, but saying it to 500 people here plus 700 people online, means that I'm going to get a lot of requests for it. I have 80,000 people in my database, so I will ask 80,000 people, plus the people that were here, do you really want me to do this? And if the answer is yes, I will happily do it. What you learn if you don't know about mining, going on a mine tour, seeing a great big open pit, seeing a mill, looking at what the exploration guys do at the same time, puts everything that you learn at Kitco or from me in context. It's a wonderful thing to do. It's hard as hell to arrange.
Oh, absolutely. I've arranged mine visits for smaller numbers of people, and the logistics, yeah, fully understand. Okay, let's talk more broadly about the metal space. It's been a tough year for the precious metals so far. The GDX is barely up, the gold price is barely up, whilst S&P 500, the NASDAQ still going great guns. What do you think is really weighing on the sector, and when do you think we'll see better days?
Well, let's segregate between gold and the GDX. First of all, gold has done exactly what I asked it to do. It preserved my wealth. It's odd that although I own a lot of gold, I kind of hope it doesn't go up in price, because the set of circumstances that make it go up in price, very bad for the rest of my life. And my life is very good, thank you. The gold stocks, I think, suffer from a hangover of 20 years of poor management. If you look back to the decade 2000 to 2010, when the gold price went from $250 an ounce to $1,800 an ounce, free cash flow per share in the gold mining industry declined. It takes real skill to have free cash flow per share decline when the commodity price is up sevenfold. Investor expectation around the gold mining industry is horrific. Investors are fighting the last war. Investors don't understand that the management teams that caused that poor performance to occur were thanked and excused. And they were replaced by more responsible managers and more responsible stewards of capital. So from my own viewpoint, given that I believe an increase in the price of precious metals is inevitable, and that I think there are more careful stewards of capital in the precious metals business, my suspicion is that the precious metal stocks will do very, very, very well looking forwards. I don't want to compare the precious metal sector with other sectors because I personally don't care about other sectors. I participate in sectors where I think my knowledge gives me a durable competitive advantage. Those are in conventional financial services and in extractive industries. I don't care about other sectors because I'm not going to compete in those sectors. I am not, and I would encourage your listeners not to be, infected with a disease called fear of missing out.
Thank you, Rick. Now, I think your comment about the companies putting in managers that are more responsible stewards of capital certainly helped improve balance sheets and increase stability and perhaps trustworthiness, and made a lot of companies more investable businesses. But has that also resulted in perhaps the negative impact of leading to underinvestment in searching for new deposits, developing new deposits, and building new mines?
No. My own belief is that there are management teams who have proven that they can deliver value by exploration. Robert is one of those. There are other management teams who haven't proven that. There are other management teams that don't have the development pipeline because of a decade and a half of underinvestment. And those companies should be returning cash to shareholders so that the shareholders could reinvest it in other companies. I actually believe that markets work. And I actually believe that a company that looks at its development pipeline and doesn't have one, understand that their core competence isn't exploration. It might be that they develop a core competence in M&A. It might be, in other words, that they look for a junior that has succeeded, they pay a fair price and buy that junior. But the truth is that the industry needs to develop more competence in exploration. The industry needs to develop more competence in mine construction and development. And I think given the track record of the mining industry in the period 20,000 to 2010, that the return of, rather than the return on capital, is a very good thing. I believe too that what we're seeing in terms of the bifurcation of the industry, where the juniors are doing most of the exploration, is reflected in other industries. It's called outsourcing. And I personally believe that's a very good thing. I think society as a whole for 30 years should have been investing more in extractive industries, but they didn't. The consequence of that is that we are where we are, and this new realism within the corporate confine, I think is a very good thing.
Okay, thank you, Rick. I want to change track now. Let's talk about Battle Bank. You made the joke on the first day that you've been in and out of retirement a couple of times, and starting a bank is perhaps not the best thing to do if one is looking for a nice, peaceful, relaxing retirement. Tell us about Battle Bank and where that is in its development cycle.
Well, first of all, banking is a lovely business. I've been deeply involved now in 7 banks. I've been part of the startup of 3, including Battle Bank. The Battle Bank story really goes back to 1998, when I became interested in backing some people to do an online bank. The idea that your computer or your phone could be my branch, and I wouldn't have to pay rent on it, meant that my non-interest expense would go way, way, way down, and I could pass that benefit on to you as a depositor. We started a bank then, I backed it, called EverBank. EverBank was a concept, an online bank. And we took that bank from a concept to $28 billion in AUM before we sold it to TIAA CREF. We did it because we designed products that the customers wanted. It lowered our marketing expense to nothing because we made products that the customer wanted. Specifically with regards to EverBank, we allowed people to save either in money market accounts or CDs in 22 currencies. Americans didn't have to save in US dollars. They could save in yuan, they could save in Canadian dollars, they could save in Australian dollars. The consequence of that is that we grew from 0 depositors to 275,000 depositors. We had a bunch of relationships. The consequence of that was that our marketing expense, as an example, to build a mortgage business was 0. We treated people well as depositors, and they called us up and said, "Do you do mortgages?" Servicing the customer, not trying to be all things to all people, made that a successful bank. It grew to the point where it was worth more to TIAA, with 1.5 million members to service, than it was to the existing shareholders. And so we sold it. Fast forward, TIAA has moved on from the old bank. All of the products that made us unique are products that they discontinued because their customer base didn't need it. But ours did. So we're starting a new bank. We're not going to have 15 savings products, which we don't understand. We're going to have one, a high yield account. If you want to write checks against it, that's great. We're going to pay you in the best quartile of deposit payers nationwide. We're going to do that because we're not going to have branch banking expense. If you want to save in Australian dollars, God bless. Canadian dollars, God bless. US dollars, God bless that too. CDs or money market accounts. On the other side of the ledger, on the asset side, we're not going to lend to industries we don't understand. We're not going to take duration mismatch. We're not going to lend long and borrow short. That's what Silicon Valley Bank did. We're going to do old-fashioned banking, blocking and tackling. We're not going to trade derivatives. We may have interest rate derivatives to hedge our balance sheet. We may very well do that. But we're not going to have $1 trillion in derivative liabilities to goose our earnings. We're going to lend against industries we understand. As an example, many Kitco listeners own physical gold and silver. Many of them own it in segregated accounts. I know that you guys have relationships with Brinks and Loomis and Viamat. If you're a Kitco customer and you own gold in a segregated account, not in your basement, in a segregated account, right now nobody will lend you money against that gold. Let's say, for an example, that a Kitco customer has $1 million worth of gold, and he or she needs $500,000 as a down payment on a house or a rental property or something like that. We will loan you money. It'll stay in Kitco's vault, but we'll loan you money on that gold or silver. Other banks won't do it. It's your gold. You should be able to do what you want to it with it. Another thing that we're going to do, we believe that your IRA is yours. Your investment retirement account, RRSP in Canada, is yours. The consequence of that is if you want to set up an LLC in your IRA and you want to use that LLC to buy a rental home, a duplex, a triplex, if you want to use it to invest in private equity, if you want to use it to buy a car wash, we can do that. We'll absolutely do it for you. We believe your money is your money. We believe our job is to create an outcome for you, either as a depositor, as a borrower, or as a fiduciary. We did it before. We're going to do it again.
And when do you anticipate you'll be sort of going live or trading or?
That, of course, is up to the FDIC. Our hope is, and I say hope, this is not a promise to your listeners. My hope is that we'll be up and open for business in October of this year. I would note, by the way, that when we started Everbank, we had a zero backlog of customers. There was nobody looking to do business with us the day that we opened the door. As of today, the wait list of people wanting to deposit with us or borrow against precious metals with us exceeds 9,000 people. So I think we're going to open with a bang.
Excellent. Now, extending the theme of responding to the needs of people, you also do portfolio analysis where people can upload their portfolios onto your website, and you do a ranking of presumably of what you think is good, what is not good. How's that going? How many people have responded to that and taken you up on that?
Paul, thank you so much for that. Any Kitco listener who cares what I have to say about natural resources can find out more by going to ruralinvestmentmedia.com. List your natural resource stocks. Please no crypto. Please no pot stocks. Please no tech stocks. I will personally rank those companies where I follow them. We follow about 800 companies. And I'll comment on individual issues where I think my comments might have value. We rank them 1 to 10, 1 being best, 10 being worst. We have now ranked 80,000 portfolios in 6 years. The process of doing that has allowed me to educate thousands of investors in a subject which interests them the most, which is their own personal portfolio. But at the same time, I've learned an awful lot about why people invest, what they do right, what they do wrong. So the process is frankly mutually beneficial. I don't charge anything for this. I'm not a broker. I have nothing to sell, although I may try to convince you to open an account with Battle Bank if you give me a chance. But the truth is, I do it to benefit the customer, and I do it to benefit myself in terms of my own knowledge of the way perception works in investing.
I guess that's also been a good feed into the curation and the development of your rural investment videos, where you talk people through the different aspects of investing in natural resources.
It certainly is. On our YouTube channel, I think we have 27,000 subscribers. In the database that we have that wants to continue to get the educational products, which I either give away or sell, there's over 70,000 people. And most of that database originated as a consequence of doing portfolio reviews. 72,000 people, both from that source and from other sources, have said, we want to hear more from Rick Rule. I monetize that, of course, by having online boot camps, which we charge for, and conferences like this. Importantly, Paul, any information product that I have ever sold at Rural Investment Media, going back 22 years, has a gold-plated money-back guarantee. If you attend my conference in person or virtually, and for any reason you don't think you got your money's worth, email me, I give you your money back. I do that because my advertising expense is zero. I advertise to people for whom I have already provided benefit, at least in the form of a portfolio review.
Well, we've certainly got a lot of benefit from being here. We've generated a lot of content. Rick Rule, thank you very much for joining us today.
Thank you again. Thank you for Kitco's ongoing support of our efforts.
And stay tuned to Kitco Mining for more from the Rural Investment Symposium in Boca Raton, Florida.
Kitco Mining's special coverage of the Rural Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.